Good morning. So it looks like the bull market has caught the flu here, and let's see where it goes. But let's just look at the charts in our systematic way that we do, rather than react. And is this really over? Is this flu going to stop this market from going higher? Maybe. We'll have to give it a little time and see. But just looking at multiple time frames as we do. Is it in an uptrend? Is it in a downtrend? Or is it in a sideways trend? And of course, that changes depending on the time frame that you look at. But when we search for the question, is the bull market over? Well, it doesn't really make much sense, to make that determination from an intraday chart. That's where the trouble starts, of course. It's where we see more detail as to what's going on. And then if it's really going to be a problem, it evolves into the higher time frames. Now, if you're a swing trader, if you're trading something as an intermediate term hold, well, you certainly can't react to what's happening intraday, because that's how you get out of good positions. But so as we see what's happening here, I'm looking at the futures. We'll take a look at the ETFs. And with the futures, we get a complete bar. So daily's in an uptrend, higher highs, higher lows. The last several days, I've mentioned the possibility of a measured move to the upside. And one of the things I said yesterday was, well, we start out with a bias as to what the pattern says, and then we go bar by bar and we see what actually happens. And is there some information that would guide us to changing our bias? So this bar isn't over yet, and so we can't change at this point. But this was a pretty big red bar as completion, and it reversed, and that's what started what might be the measured move to the upside. So we'll see what this looks like. Now, if it's closing under 33.50 at the end of the day, well, that's going to be a pretty big convincing bar that prices can go lower, since it would be taking out the low of two prior up bars. On the other hand, if it closes with a bottoming tail bar, and even if the candle body is red, but it closes close to the top of the range, it's going to be like, okay, there was an overnight reaction to this virus news, and the market took it as a buying opportunity. So we're really going to have to see. Now, obviously, the weekly isn't even anywhere near any kind of a pattern that we would question this uptrend. So, and we have till the end of the day tomorrow to see whether it looks like this, whether it's closing at 3,400, or can you imagine it was closing down here at 3,240? So the next bar, right, while it's only one candle, can dramatically change what our bias is. So we'll see. The hourly chart, was this dip, had a rally, and then last night it was like, the market caught a cold and down it went and rolled over and came down to this support level. Right? So as we see something's going up and begins to correct, the next part of the thought process is look to the left. Where's support? I see where support is. What's the reaction to support? A bottoming tail. Buyers are stepping up. Now, this is a deep retracement. Some of you might remember Dan and I did an MT Live a few weeks ago on retracements, and we went through the systematic thought process of, well, it made a higher high. This is major support. The depth of the retracement here is greater than 100%, which opens up the door to a lower high and maybe lower. Or does it retrace all the way back here, which now says, hey, think sideways trend, because that's what's going on. So we don't know yet whether this is going to, evolve and break into this void here, which would then open up the door to the possibility of this bar by the end of the day looking like something pretty nasty. And that's what we'll be looking for today. And so on the 15-minute chart, you see where it bottomed out down here, and now it's coming into the first part of the price resistance, right? This was an accelerated move, created a void, it's chopping around, right? Green bar, buyers come in. Now this is where we say the heavy lifting begins. Can you push through this? And it's not a significant area, but we'll see. So we look at what is, and then we monitor. We look at what is from the past, we monitor the moment, and then make a decision if it's something that we want to do as far as placing a trade or not. And Qs, same story, a little bit of relative strength. Didn't push down through the low. Right? We don't need any indicators, anything fancy to determine whether something's showing relative strength or weakness. Just look at the chart and compare. YM, wow, even more relative strength. That's a bit of a surprise because for me, because it's been showing some relative weakness. But the analysis is still the same in that, what does this red bar look like at the end of the day? The weekly looks similar to the others. This is coming up into resistance, so on and so forth. And if the market is going to roll over, initially this might be the better opportunity to short, but it's got this support here. So same as we do in the green room when we short the futures or SPYs or Qs. And I think we went over this yesterday, if not, it was the day before, where we had a short on the ES and the spiders. And I explained, okay, we're short the S&P, and there's going to be a stall point based on the Qs coming into their gap fill. And we sat through that gyration, right? It's like that uncertainty. Do the buyers and the Qs eventually rip the ES up, which wouldn't be good for our short, but eventually it chopped around. And once that broke, well, then everything kind of followed to the downside because the Qs at the time was showing relative strength. So we keep an eye on, these different markets to see where their support and resistance is and where they will have reactions. And that'll guide us in a market that we're in. Right? Russell, just had this deep move down, got sloppy, so the weekly here is certainly in question after the breakout failure, and this is more or less in a trading range. We'll see how long it goes on. Oil, I'm still trying to lift off the mat here. You can see the weekly support, and so we'll just see what it does. Bonds obviously up here. Nick St. Bob, Q's had a bad tick, 5-minute. What makes a bad tick? Just bad data from the exchange. Sometimes it's your software platform, Nick. Like the other day, I mentioned that the SPY ETF contract on TC2000 had a bad tick. However, on my eSignal platform, there was no bad tick. So that's a platform issue. When you and I and everyone else sees erroneous movement on the chart, a big bar that seems really weird, not normal, and it's a bad tick, well, that just means there was bad data from the exchange. All right. So bonds up here a little bit, coming back down, whippy price action, so, lifted up, wide range bar igniting, up to resistance. And now when it got up there, now it's having a deep retracement back down. So what was supposed to happen from a bullish point of view was it hang around up here. That topping tail that was a breakout failure would not have resulted in a move all the way back here. So the market's really trying to figure out here about, is this virus thing really a problem? It's unfortunate that people are getting sick, and more unfortunate that some people are obviously dying. But the charts are telling us, well, we're really not so sure about all of this. We're worried, but we're not, too worried or really worried yet. Anyway, it's creating uncertainty and a bunch of jiggles that are going on here. And maybe it'll evolve into something else, or we'll just look back on this and say, hey, it was just a choppy sideways correction. And, as we talked about, the wrong way option traders, they've been loading up on the calls here. And while this has been kind of a really slow kind of move to the upside, it isn't dropping. And, well, today it is. We'll see how far it goes. Breadth has been diverging for a long time, right? Since the end of last year, right? It peaked out, let's just say over here. And, so we were kind of thinking, well, maybe this will just push up and breadth will get to a bearish extreme and sentiment will be up there and we'll get a sell signal. But, well, I keep saying, we'll see how today evolves. But I never like seeing the wrong way option traders, buying this amount of calls. And the momentum is really slow, as long as I guess they're in the money, they're buying stuff in the money, it's got to be increasing in value, but it keeps gapping up. All right, could this be another buy the dip opportunity? I guess, as I've been saying, David, we're going to see. It's not going to be the buy the dip opportunity from a swing trading perspective because, you've had this move and it's a continuation. Could it be a buy the dip opportunity intraday? Sure. Absolutely. So again, as we go back and look at these charts, someone thought it was an opportunity here. Now, we're going to see, that was 5 o'clock in the morning. Now we're going to see how this shapes up, this morning. And then we shall see. Gold, right? Just chopping sideways here. They're trying to figure it out too after this run up. Continues to consolidate. Silver, just kind of messy. And we always look at the transports, they continue to grind their way up here and into this resistance. And we'll see what happens here at the end of the day. And just looking at spiders. So they're at 336. Let's do this so we can all see. Okay, so went down to 335-ish, was all the way down here. So when we look at the futures and we see a big red bar, well, I always want to look at something that's trading what I call the day chart, right? 9:30 to 4 o'clock. And so now we still got 15 minutes to the open, but and this may be stalling here from what we saw in the futures where it was at. But let's just say it opens up at 336. 336. It looks like it's gapping down below the low of that bar. Right, and data window. Low of that bar is 336.43. So it would be gapping below, slightly below the low of that bar. That's the beginning. That's the start of a bearish day. Right? So the question will be, as we've looked at, let's just go back to ES here. Right? Start of a bearish day, and if it cannot push deeply into where it fell from and starts to move down here, we can have a very good short selling opportunity. Right? So we'll see. Right? But this is how I would suggest planning it out. As you look at this and you look at the ETFs with the day chart and see where prices are at, it's like, okay, the futures are down there near support. They're bouncing, blah, blah. But where is this opening up, right? And 294, whatever, gapping below the low of a larger green bar. Now, the bigger this bar was, so for example, if we were to take this bar and drag it over here, right? So further up, and it was gapping below that, the degree of a bearish gap down would be much greater than gapping down below a smaller bar. Really, just common sense. But now, gapping down into this support, which it's not gapping down into a void. It's gapping down into a support level. So we're going to have to, from my perspective, sit back at the open here for a little while and see what the reaction is to that. Right. Next support level, 3340-ish. SPX. Yes, absolutely. You know, give or take. Most of the time, McGraw, when these kind of things break like this, they usually go all the way back down to the bottom. They don't stop at the top, because this is what is perceived to be the safe entry point to buy. All right, so the bottom part there. This is really not much. So just like we looked at the futures, well, there's really, so you could say, okay, there's some support here. Yeah, but this is the area where the buyers are more likely to come in all the way down to the prior low. Right? So we're starting to get a little bit of a bearish reaction there and so on. So same process, right? Where is it? Right. 233-ish. 33. So this is not gapping down below the low of that bar, but it's relatively deep. So there's the whole process of going through what we do every day and help you to do the same thing. It's just a systematic process of seeing, and you know, if it's gapping down, where is it relative to support or resistance? Is there a void? If it's gapping up, you know, well, if it's all-time highs, there's nothing there. But if a stock was in a downtrend and it's gapping up, well, you go through the same process to do that. So with that being said, Dan, all yours to take over.
All right, good morning. Let's take a look at a couple of our opens here first. When you mentioned IYT, I pulled it up, and McGraw, this could be a great candidate for a condor. We got our resistance, support, so I'll keep an eye on that. Someone on YouTube's asking about Octa. It broke out, it stalled momentum, gapping down here a little bit. Just, keep an eye on it. Nothing to do now, particularly in a gap down market. I think, Greg said it about 25 times this morning, but I totally agree. We need more data. Let's chill. We got sell setups right now, pre-market, using pre-market data, bearish gap down, overbought market. So we'll chill. Let's look at a couple opens on Tesla. We did a call spread yesterday. That's given us a nice gap down. I moved stop to 30-minute high. Gulf Delta, we did a put spread, gapping down a little bit, but it looks fine. Google, we still have a half lot with a stop 1505, so that's fine. Oxy, long calls, that's fine. Avgo, we have a put spread that expires tomorrow. The 310's way the heck down here. Gapping it down a little bit, but still $11 out of the money. Alta, we did a put spread yesterday, gapping down a little bit, but our strike is the 290s. So even at 295 here, we still have $5 more of cushion. On deck, we did a nice put spread yesterday, and that looks like it's opening fairly flat or no prints yet, but we covered half yesterday. Let's continue now with gappers. We got a ton of them here. Redfin 2760. That's a bullish gap, bullish uptrend. Look at this 1, 2, 3 right there. Wow. That's one of my favorite patterns, a 1, 2, 3 from consolidation. Let me put a note on that. Whenever I see nice charts, I just send myself a note, add it to my directory. 607, hey, nice bullish gap here. This looks like a penny stock toy. I don't know if it's bio, but that's a nice bullish gap, bullish pre-market. I'll keep an eye on that, see if it can set up for a day trade. 33, see, all I do here in my process, I'm looking up here pre-market to see where it's trading. 33.75, and then I just mark it off here, and that's already up 3 bars. Nothing to do with that. So I'm just going to delete you. Tesla, we looked at Greg's coffee shop. 37.61, a small gap down, but no pattern. Ralph Lauren actually had a very bullish close. Gap up, buy setup, 3 sideways bars, and I don't know if it was earnings or they just came out and said the coronavirus is going to hit them a little bit. But that's a bearish gap. Oh yeah, Apple. We have a put spread. We had a beautiful day trade yesterday. 15-minute breakout here. Had a beautiful day trade long where you can buy stock or out of the money calls. I did a little lesson on that and posted it in our Facebook group. So we have a put spread for tomorrow, the 320s, and there's nothing to do. It's a bearish gap into the bar. It's just, there's nothing to do with it. Deck, we mentioned Ulta, we mentioned TYL. That's a bullish trend. Can't tell where you're gapping. We'll come back. Well, I'm showing a print of -3, but there's no volume, so I don't trust it. 24 bucks. That's a very bearish gap. Let's see what it does in the first 30 minutes. This is slop, breakdown failure and a breakout with a price void. So it closed very bullish, but now it's gapping down $1.64 to 19. Okay, so that's a very bearish gap now. Close night, and I think these are all earnings, which is why we don't hold earnings unless it's a core trade. Pega will come back. No pattern. Intap getting whacked. 53.50. Wow, that's a big gap. That's pain, but no setup. IYT is not a sector in SPY. It's an ETF. 69.80. Nice gap up. Fair, light volume, but that's a put spread candidate if it can hold the gap. The sell setups pre-market are continuing slowly to the downside. AMAT already had 3 days up and is gapping up strong, but no pattern. Cisco getting whacked. 47.50, that's a bearish gap, so that's another breakout failure. No volume, no pattern. ATUS, it's bullish pattern, 29 bucks, gapping down a little bit. I'll take a look at it later. No volume, we'll come back. Charlie Foxtrot, we'll come back. QDEL, no volume, but kind of an ascending triangle here. Uptrend, daily, weekly, monthly, we'll come back to that. Chug, I don't like the way it trades. Reg, we'll come back to it. SPWR getting whacked almost 10%, 10 bucks. So that's a bear island reversal. So it's gapping under this big green bar. So that's short term, very bearish. Alfa Romeo, $2 stock, ugly downtrend. Wow, it has big volume though, 10.5 million volume. Look at that ugly downtrend. Yeah, I got to start building my chart lessons on. We're going to build an MT live of how to make money on stocks under $5. Trip, 31 bucks, up a little bit. No pattern. Here, 738. That's a bearish gap in a bearish downtrend. Here, look at it. We did moving average analysis yesterday on topping and bottoming patterns. And so, you know, there's no time for a dialogue. But if I were to ask you, take the candles off, and I just put a big box from December to today, and I asked you, based on yesterday's lesson, is that bullish moving average alignment for a bottoming pattern? Would you answer yes or no? We covered it in great detail yesterday. Answer, no. Absolutely. NUS. Ooh, it's showing. Oh, it gapped down. Oh, yeah, it's getting whacked. This was a post market yesterday. 29 bucks. That's in pain. Look at these things. When they go vertical, you better get off that ride when it stops. This is musical chairs. When the music stops, you better hit that bid. Wow. 130.90. That's another nasty gap, but nothing to do with it. We'll come back to it. Chef. I see one print down here, but no volume. MGM 3240 bearish. There's another bear island reversal. It's leaving this poor bullish bar all by its lonesome. That's bearish short term. Ahmad, yeah, we talked about Tesla. Nothing to do with it here as a new trade, but we have a bear call credit spread open. 9/11. This was bullish until today. So that is earnings also. Whiskey, no pattern. Whiskey Mike 123. That's been on a tear. Now look, although this is not a textbook 1, 2, 3 because the second bar was not an inside bar, it was a 1, 2, 3 intraday. Intraday. If it stopped prior to the day's high, that would have been a beautiful 1, 2, 3. But you know, you can see the effect of that run. You can look at these MAs. That's also a visual aid telling you, look, this is another fantastic. This is what we talked about yesterday. Converging 20 and 50, intersecting with a 200. That's telling me that the weekly is a beautiful pullback in a 200 period uptrend. So that was a beautiful setup right there. And well, you can see it on the monthly there. That was the buy setup on the monthly. Look at that. I'll glance at opens, but Google looks like the back half is hitting our stop, but at a profit. WEX, nothing to do. TPX, Wow, that's strong, but nothing to do now. Lima Hotel, strong, nothing to do. Nilly, same. PBF, same. Pepsi, earnings coming in.